to the market? Well, we'll discuss what they could mean in the future. And earnings, of course, we're getting inundated with earnings left and right. None of them have really been that sexy, though. You know what I'm saying? So we'll talk a little bit about that. In the meantime, welcome to the most dangerous show on the Tasty Live Network. It's Engineering the Trade. I am Jamal Chandler. Market just seems to be going up day after day, with a little bit of down in between. We're having like one of the best January since I think it was since 2019, which is remarkable to say the least. So the question begs, what's going on with a lot of this data, and is it really mattering to the market right now, or are we just in a bullish channel or in a bullish pattern, and the market just wants to go higher after the ugly last year? Let's pull up some slides and let's talk a little bit. We got the GDP release this morning, and this is one of the few that I kind of look at a little bit more recently because, listen, the talk has been rates have been rising over the past year, right? You know this from not only what we say, but theoretically your bank should have some higher rates for you to put some money to work these days too, right? And so, GDP is just one of those big, huge things that kind of gives you an idea of the health of the country, right? And not only the health of the country, but eventually the stock market should somewhat care about what GDP is doing too, unless it's not a big deal, like it's not a big change. And so in the case of this number, the economy grew, right, over the past quarter faster than we expected into the end of the year over the fourth quarter. But it was lower than what we saw in the third quarter. So it's kind of weird. It's one of those situations where I think the Fed could actually still raise rates, which of course the market didn't like, right? So that's where all of this feeds to. Are we going to see the rally continue because everything seems to be fine with the economy, or are they going to have to do more rate hikes, and that's going to affect the market further? And so I think that's kind of the real key here with this GDP release. And I tell you one thing that was really interesting to me is that, the biggest thing you need to know about GDP is that it's two-thirds of GDP is consumer spending, right? So if consumers are still spending, that means the markets are okay. That means there's no issue with jobless claims, which again, those continue to go lower. And so this feeds into what's going to happen next Friday when we have a jobs report. How meaningful is that going to be? Is there going to be a huge change? I don't know. But all you need to know today is that the market liked the GDP report, didn't seem to have a problem with it. And why should it? GDP is positive. Everybody's been talking about this idea of recession, and it hadn't seemed to materialize. There's no, like they always say, recession is when your friend loses a job. Depression is when you're also out of a job, and your friend. And as of now, we've talked about a lot of these layoffs, particularly in the tech side. But again, they hired so much in tech, they had to shed some of the jobs. And it's not like they've shed all of the hirings that they did over the past 2 years. They just said some. So does GDP matter? Not when it's fine, really is the real answer here. Doesn't matter when it's fine. New home sales. What's interesting about this? Well, they rose 2.3% in the past up for December, but overall, year over year, disgusting. I mean, new home sales were down 26%. Rising rates, once again, caused people not to be buying as many homes. You can understand that, right? Who the hell wants to buy a home if the rate is ridiculous? So this is another one of those situations. How does this affect a lot of the home builders and home builder stocks? Well, you know what? They've been fine. We haven't really seen like a meaningful decline in home builder stocks, even though new home sales have been, not so great, and pending home sales have sucked, and, all these other things. But it's something to keep an eye on. I think overall, I think it's a sign that maybe we're starting to see somewhat of a change and maybe a beginning of a turnaround in home builders, unless it eventually looks like natural gas, which I also have a chart on recently. It could be on the way down, but something else to think about. And then finally, earnings, man. So we've had about a fifth of the S&P 500 do earnings so far, and it's been fairly blah for the most part, I think. And that's also been leading to a lot of these, what we call inside moves on these earnings names. I mean, like, for example, Tesla, I actually didn't look over their earnings report, but just looking at the move, I think it was better than feared. And it was pricing about a 10% move prior to earnings. We're just right around there. I think just under, maybe 9%. You see this a lot. I mean, IBM earnings have sucked for a while. The airline earnings have been, kind of hit or miss. Bank earnings weren't that great, right? Netflix earnings, I think they were fine, but even that led to somewhat of an inside move. It's hard when you look at the fact that a year ago, right? Year over year, there's no way the earnings are going to look good. Quarter over quarter, maybe looking a little bit better, but year over year, I mean, I think we saw peak earnings a year ago at this time, and so they've been kind of boring. I'm curious to see what next week looks like when we get the likes of Amazon and Meta and those guys. But so far, they've been blah. You know what I mean? I don't know. Leftovers, the gym rats. They live in the Nordic countries. Let's move to the next slide. As we do that, those of you who are watching the show on the Tasty Live website, Tasty Live app, come over to Tasty Live YouTube, get in there, type in some characters, and, chat with me, say what's up. I'll say what's up back. You know what I'm saying? 42 of you in there so far. Like and subscribe to all the content you see. There's better stuff on this YouTube page than me, and you'll want to get all of it. So when we're looking at a chart of the percentage of population in different countries where people have gym memberships, obviously you can see the ones that are highlighted. Norway, Sweden, Denmark, and Finland. The Nordics, man, they have gym memberships. They are working out up there. That sounds fun. USA, 21%. That's low. But again, this is just gym memberships. I mean, maybe people are working out on their own without gyms. We saw the pandemic certainly change that up. A little thing called Peloton was one of the leading ways for people to work out without having to go to a gym. I'm sure that's changed over time. I don't go to a gym. I go to a friend of mine's house. There's a bunch of us who work out together. It's a guy who is a trainer for the Blackhawks who does the regimen that we work out. It's pretty awesome, actually. It's kind of cool to have a professional trainer do your workouts for you. That's cool. But in the U.S., 21%, Netherlands, 17%. Canada 17, UK 16, Australia 15, Germany 14. I'm a little surprised by Germany, but you know what? Germany is such hard workers. They're probably working too much to go to the gym. But the Nordics, though, they go, man. Norway, Sweden, Denmark, Finland. Kind of interesting, huh? Let's move ahead to the next slide. So, rally. NASDAQ has been kicking butt, man. Up 8.1% on the year so far. Russell 2000 growth, 7.8%. I don't even know what's in the Russell 2000 growth name specifically, but again, clearly people are going back to growth names, and tech is the point here. Russell 2000 is not that far behind itself behind the NASDAQ at 7.3%. You got Russell 2000 value, 6.8. So the suite of Russell 2000 is doing very well right about now, in case you were wondering. Russell 1000 growth, 6%. And then you got the S&P 500 at 4.6%. And then the Russell 1000 value is the only thing that the S&P is beating out in this situation, 3.9%. Let's move ahead to the next slide. Now we can look at sector performances for the S&P 500. So we know the S&P is up 4.6%. So what areas are leading the S&P? Well, comm services. That's where and anytime you're wondering, for those of you who, you can always go to the Tastyworks, and within Tastyworks, you can go to, in your watch list, you can go to sector. You can just get a look at what names are in some of these sectors. So when we talk about comm services, that's where Meta is, that's where Google is, that's where Netflix is. Of course, Netflix is usually the one kind of leading the way and moves. This thing was down pretty big last year, and Netflix was main part of the reason, I felt like. Of course, Meta too, I guess. Charter Communications in here. A lot of the mobile things, internet, right? It's Comcast, T-Mobile. I'm a T-Mobile person now. We were Sprint, and then they got bought out. T-Mobile, I don't know. I don't really like it, But it's like, what's the point of changing? I mean, they're all the same. I mean, whether you have AT&T, whether you have Verizon, it's like they all, it's like dogs with different fleas. You know what I'm saying? I don't know. It's like whatever. Anyway, don't get me on that. Disney has been balling recently. I had a Disney call calendar. Just got out of that, I think, yesterday. I've had two. I had one that was, I think, the 100 strike call calendar, and then I had a 105 strike call calendar. I just got out of the 105 because once you get above your strike, what's the point of holding on to it? You'll have a gain. It's time to close out. Those are small gainers, right? Those are ones where you're not necessarily fully convicted in stock going up, but you think it's going to. So you keep that on. You know what I'm saying? That's a good question. Yeah, Trent Davis. Pair trade opportunity by the S&P, sell the Qs. I suppose so. Yeah. I mean, honestly, I was long. I liked the idea of being long the Qs and selling S&P, but now at this point, you could probably make a case for that to reverse that pair trade because it has run some, right? If you think the market's going to pull back, that would be the way to do it for sure. You think Bob Love? Hey, that's a good name, Bob Love. You think T-Mobile has good customer service? Really? Free Netflix with T-Mobile? Really? I didn't know that. I should look into. Is it really free Netflix with T-Mobile? Oh, I got to talk to my wife about that. We got to look into something. We're still paying for Netflix, even though we have T-Mobile. So, comm services, kicking butt. Consumer discretionary, which was really knocked down last year, also making moves recently, right? And, consumer discretionary, that's Amazon, that's HD, that's McDonald's, Nike, Lowe's. Consumer discretionary is always the thing. I say the things that you want but don't need. I mean, you don't need Amazon, but once you get on, it's hard to get off. You could use Home Depot. I guess you don't need it. You damn sure don't need McDonald's. You don't need Nike, but I like Nike. I think I'm socialized to like Nike somehow. You know what I'm saying? I don't want to get into it. It's a deep combo, but I think so. Tech, 7.6%. Materials, 7.2%. Real estate, 7%. Again, talking about real estate, talking about home sales and all those things. They seem to be doing fine. I don't know the exact, let me look at the exact names that are in real estate. Oh, yes, mostly like REITs. Mostly REITs, I would say. Yeah. Financials, 5.3%. Energy, of course, energy was the big leader last year, now only up 2.9%. Industrials, 2%. Healthcare, consumer staples, and utilities. The things that are actually supposed to be fine during a theoretical recession, those are the things that are down right now. So, you can come up with narratives for what's going on with the market, but when you look at data, which we do, that's really all that matters. Let's move ahead to the next slide. I pay $5 a month Netflix from T-Mobile. We'll check how good customer service is. That's interesting. I didn't know that. Going postal. It's a good name as long as you actually mean you work for the postal service and not going postal means. First time watching. Thank you for the opportunity to see what you're all about. For sure, man. For sure. That's what I'm here for. Hopefully you find something interesting. Natural gas has been really one of the more talked about things from us market pundits, people who actually watch the market. This past beginning of this year, it's been on the fall ever since August 23rd of last year, which was basically around the high for natural gas. It's down 70% since that time period. It's below 3 for the first time since May of 2021. There's all kind of narratives. You have to assume there's been a decent amount of build in natural gas, which means the storage, there's a lot of supply out there and not too much demand. And, the weather hasn't been particularly crazy in the really cold parts of the country, I guess. I mean, we had a cold snap for a little bit there, but I don't know. It's been one of the more interesting things to watch, and I think a lot of people have been bottom fishing on nat gas. I really hadn't been interested, but, at levels like this, again, this is comparing, it's been nearly 2 years since it's been this low. It can go lower, right? Like it can go down to below 2s, who knows? But this is something that I'm starting to watch, and I don't know. I don't like trading UNG. That is one of the things, but I'm sure there's a lot of equity-related names that are related to natural gas. A lot of the E&P names, right? Something to keep an eye on, but looking for places for volatility, which there really isn't a whole lot of volatility out there to sell right now. This is just something that I'm hoping creates more volatility in some equity names. Let's move ahead. A slide, please. So this is one of the things I've been talking about more recently. Microsoft and NVIDIA. You can't go a day without seeing something on ChatGPT, which, by the way, got a question on that in the in our chat today. That's our poll. Have you used ChatGPT yet? Yes or no? 62% says no. I'm actually in the no myself. I've known about it kind of since the beginning, but I've yet to feel like, I don't know, I don't feel the need to sort of mess around with it, you know? Like I haven't played around with it and I don't really care. So this is an interesting chart. I wanted to look at this idea. Again, you know, there was big news earlier this week about, well, the street feels that NVIDIA is one that's going to benefit from this ChatGPT thing because it's supposed to, you know, it's eventually starting to make waves. It's starting to show up in a lot of different ways. It's even in a news story today about BuzzFeed and Meta and whatever else. I'm sure you can look it up. But a lot of people were thinking, well, since it's AI and NVIDIA does a lot of work with AI chips, then NVIDIA should benefit. But my thing is, well, why shouldn't Microsoft benefit? They're the ones who are actually invested in it. They're the ones who are actually, you know, sort of using it too. So if NVIDIA is somewhat of a beneficiary, maybe Microsoft will be too. So I decided to put it to the test. And I decided a couple of days ago, right here, as I was talking to you guys, I'm going to get long Microsoft. And I'm going to stay short via a put spread or something like that in NVIDIA. And this is really going on day, what? Kind of, well, I mean, initially I had a call calendar in Microsoft heading into earnings because that's just the way I wanted to play it. That sort of, I think I lost small on that. But as earnings were winding, basically had already been out yesterday, I decided to get long a Zebra in Microsoft. And so now I have a long Zebra. I have a NVIDIA put spread. I actually had the NVIDIA put spread in February. I was losing on that. So I actually reset it and went out to March. So both of the trades are now in March. I'm long Microsoft, short NVIDIA. And this chart kind of gives me a little bit of confidence here because looking at the ratio between the two, obviously you can see from 2010 to well, I mean, there was a big dip there, like sometime in 2011, but Microsoft had been trading well above, right? Like I think NVIDIA was fairly undervalued for a while, and then we had you know, there was a big drop off there as NVIDIA started to gain value and Microsoft started to lose value. We can see this chart perk back up during the onset of the pandemic, and it's been fairly low for a while. So I feel good about taking a shot on long Microsoft. I do. I feel good about it. We'll see. I don't know. I would like to. This might just be, unless something happens that really disenchants me, this just might be a year-long type of trade just to see what happens here. I don't know. Let's move ahead to the next slide. So we got earnings. I'm actually Jamal, expected move in earnings in Intel. We're going to look at Intel. We'll take a look. Intel earnings, we got Visa earnings, we got Clack earnings. Clack is semiconductor, right? I'm pretty sure. American Express earnings. It's always one to look at just based off of the consumer and how much people are spending. Same thing with Visa, same thing with MasterCard. I didn't look at MasterCard's earnings, but MasterCard was down. A little surprised by that one. See, again, you can't let narratives sometimes the narrative doesn't always fit if it's such a big macro narrative. Like, I'm not surprised Southwest Airlines, LUV, was down because you knew that big snafu that happened where they had to cancel like 16,000 flights, that's going to affect your bottom line. That one was easy to see. Something with MasterCard and Visa, I mean, they're they receive money off of charges. Every time somebody's ringing that credit card, they receive some of that. And we're under the assumption that consumer credit is as high as it is and people are using credit cards like crazy. But for some reason, that didn't translate into gains for Microsoft. For MasterCard. Not exactly sure why. So it'll be interesting to see if that's the same situation for Visa or AXP or not. Chevron has earnings, although they did kind of come out with some very positive news. I think it was yesterday, right? About they're already up pretty big. They came out with a buyback and some other crap last night. Colgate-Palmolive, that falls squarely in the consumer staples realm, which again, consumer staples haven't been that great. Charter, and then I think Charter's in the comm services, and then HCA, which is healthcare. And healthcare has been fairly quiet. I got this UNH position that just sucks. It's been kicking my butt. It's only a call calendar, but God, just can't catch a break on it. So now the big stuff is next week. We got basically 2 days apart. We got the last day, which is usually that Wednesday, the Feb 1st FOMC rate decision. It'll be also fascinating to see what happens for the first 2 days of next week, as it's the end of the month. You wonder if there's going to be some flows, things moving around, end of the month, rebalancing, who knows what. But then we got, of course, Tuesday. That Tuesday is when the FOMC meeting starts, and then Wednesday is the conclusion of it, where basically everybody's assuming they're going to give you the the 25 basis point rate hike. Then we got non-farm payrolls on February 3rd. That's coming up. Again, another look at what's going on with the employment situation and whether or not rate hikes have really been affecting it. So far, minimal effect that we've noticed. Number of S&P 500 stocks above the 50-day moving average, 340. Let's move to the platform. I know people always mess with me on this. If you say the letter N instead of the sound N, makes you have NVIDIA's pronunciation. I like saying NVIDIA. I just do. I think, you know what happened? We used to, when I first started trading it, me and this guy who was much more senior than me, he would always say NVIDIA, and that's kind of where I got it from. Some people like to say NVIDIA. I don't know. Yeah, it's boring. NVIDIA. I like saying NVIDIA. Do you put on positions on all these charts of the day or after the day you feature them? I don't always put all the positions on. I just point out things that I notice. I mean, sometimes I'm a little more convicted than others. In this case, I actually already had the position on in Microsoft and NVIDIA. And I decided to look at that chart to see, whatever am I doing, does it make sense, right? And so the chart actually gave me a little more confidence. So this is one of the few times where I didn't really look at data. I just looked at, I think the NVIDIA move has been very strong recently, and I kind of wanted to get short it. And then this news came out about ChatGPT and NVIDIA connection. And I was like, well, what about Microsoft, right? That appears to be something there of a pair trade. And I decided to make it a pair trade. So we'll see if it works. I hope it works. We'll see if it works or not, though. But, you know, it is what it is. HB, why do companies buy back at all-time highs? Because they can and because they have the money. That's why. But you're short CVX? Okay. Well, we'll see. A lot of these oil companies have been okay on earnings, I think, because they just had strong years. But we'll see. I wouldn't be afraid to fade this move neither. But I'm not that interested that I care. So, Intel. Let's take a look at earnings. 29.5. We'll say 30. I mean, so sometimes you'll see when you're looking at the expected move, sometimes you'll be confused as to which strike to go to. It doesn't really matter. What I often do is just, in those situations, I divide it by the actual strike. So this one I would do 2.06, which again, you can see it's under 2%, divided by, remember when Intel earnings used to be somewhat of a big deal? 6.9%. This one's fairly, this one has been really quiet. Intel is just not the leader anymore. These other chip companies are. NVIDIA is one of the leaders. Intel is just kind of a old, quiet company. It did have a moment last year. I mean, it was starting to do something, but I don't know. It's been the quiet guy of the bunch compared to like AMD and NVIDIA and all those guys. You know what I'm saying? So how are pair trades actually structured, long, short? You can do a pair trade in a bunch of different ways. Pair trade is just sort of a catch-all phrase for trading something one way and trading something else in a different way. In this case, I'm doing deltas, right? Pair trade deltas. I'm long deltas in Microsoft. I'm short deltas in NVIDIA. You can be long volatility in something and short volatility in another as a pair trade. And, it's up to you how you want to do it. But when I say the phrase pair trade, it just means playing one thing off of another. You're playing one trade off of another in that respect. So Intel, yeah, I don't really care about earnings in this one. And I'm really curious to see how this does because, like I said, most of these earnings names that we've seen, the moves have been really inside earnings. I mean, inside moves, meaning like they haven't really exceeded what was expected on the earnings day. There was an impressive comeback by Microsoft yesterday, that's for sure. I mean, the stock was down. What was the low? It was down like $10 as when we came into the day, and ended up closing $3 higher, I guess. So in some respects, no, it didn't close $3 higher. Where did it close? Actually, it closed right around fair, right around where it closed yesterday, right around where it closed the day before. So it definitely had a range, but it wasn't. Like we said, these moves have been somewhat inside earnings. It's really weird. Who's else? Oh, I said Visa. Visa's another one. It's everywhere you want to be. We were talking about this on the desk. What happened to Visa? What happened to the Visa commercials? They don't seem to exist anymore, right? Kind of weird. This one, again, I'm not trading Visa. I'm not actually trading. I don't think I have a position on any of the earnings tonight. I just want to hear maybe what Visa says about overall economy and their situation, what they're seeing from a standpoint of just numbers. This one's 2.9%. Yeah, I don't know. I'm wondering if this week and last week is kind of setting the tone for earnings. I don't think we're going to get a whole lot of movement. Now, what sucks about that is that most of them aren't classic IV sales heading into earnings. I mean, look at Visa, low IVR. And was Intel? I guess that's around a 50, I guess. But I don't know. Do you really want to be selling anything? I mean, these are very cheap, dollar cheap options. I'm just not interested in selling any of these. 99 cents for a strangle. You could probably do that, I guess, on a $30 stock, but I don't know. These all fairly quiet, it would seem. So, is there any other one? I don't think there was another one I was looking at. Let me see. One more. I thought there was one more. Oh, American Express. Well, we looked at Chevron. We're not, again, I'm not doing anything in any of these earnings tonight. But I always still like to look at the move and see if anything looks a little. But none of these moves have really looked that rich, right? 5.75. This one, I guess this is what is that 3% maybe? 155. Yeah, 3.7% for this for American Express. It's a little more than Visa, but still, I don't know. What can you say? Blah earnings is what we've been talking about. Quiet market that seems to be drifting higher, and volatility is fairly low. When you look at the front month VIX being in 1965, the next month VIX being 20.74, and April VIX being 21.45. Quiet markets, folks. Don't let them trip you up. Tell you what, that's all I got for today. Yep, that's it. It's fairly quiet. So, let's tell you what, keep it real. And thanks for watching. As always, be smart, be patient, trade small, trade often. See you guys later.